Circle, the company behind the USDC stablecoin, has launched a new Layer 1 blockchain called ARC. This chain is specifically designed for stablecoin-based payments, foreign exchange, and capital markets activity. Unlike general-purpose blockchains like Ethereum or Solana, ARC is built with a narrow focus on moving digital dollars efficiently and securely. The network is currently live on a public testnet, with a mainnet beta expected later in 2026. ARC is an open Layer 1 blockchain, purpose-built for stablecoin finance. It does not aim to compete with platforms that handle NFTs, gaming, or DeFi protocols. Instead, it is infrastructure, optimized for the financial plumbing that stablecoins require: settlements, cross-border payments, and institutional treasury operations. The chain is a direct extension of Circle's existing operations, which already issue USDC across 34 blockchain networks. As of May 14, 2026, there were 76.5 billion USDC tokens in circulation. ARC gives Circle its own rails for handling these transactions without relying entirely on third-party blockchains. This shift could reduce dependency on external infrastructure and allow Circle to control the flow of USDC more directly. It also positions ARC as a purpose-built solution for stablecoin finance, rather than a general-purpose smart. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Contract platform. The ARC blockchain uses USDC as its native gas token. This means that users pay transaction fees in stablecoins rather than a volatile native asset. This design choice aligns with the broader use case of the chain, moving digital dollars efficiently. It also reduces friction for users who are already familiar with USDC and may not want to deal with the volatility of other tokens. In addition to gas in USDC, ARC includes built-in foreign exchange functionality, sub-second finality, and opt-in privacy features. These capabilities are designed to support high-speed, compliant financial transactions. The chain is also EVM compatible, allowing developers who are already familiar with Ethereum tools to build on ARC without needing to learn a new stack. This compatibility could accelerate adoption and reduce the learning curve for developers transitioning from Ethereum to ARC. ARC integrates directly with Circle's existing product suite, including USDC. This integration allows for seamless movement of stablecoins across different environments. The chain is not intended to compete with Ethereum or Solana for DeFi or NFT traffic. Instead, it is a specialized infrastructure layer for the stablecoin ecosystem. This focus could attract institutions and financial actors looking for a more compliant and efficient way to move digital dollars. The launch of ARC marks a significant step in Circle's strategy to control the infrastructure around USDC. By building its own blockchain, Circle can ensure that USDC transactions are processed efficiently and securely. It also gives the company more control over the user experience and compliance mechanisms baked into the chain from the start. However, the success of ARC depends on adoption. While the chain has a clear purpose and is backed by Circle's existing infrastructure, it still needs to attract developers, users, and most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Institutions to build and use it. The testnet phase is a critical period for identifying bugs, testing features, and refining the user experience before the mainnet beta launch. The next signal to watch is whether ARC's testnet activity leads to meaningful adoption and usage before the mainnet beta. If developers begin building applications on ARC and institutions start using it for cross-border payments or treasury operations, it could signal strong momentum. On the other hand, if the testnet fails to attract significant activity, it may indicate that the market is not ready for a purpose-built stablecoin blockchain.